Yes Bank, PNB, HDFC, all these stocks seeing quite a bit of decline. Mayuresh Joshi is also with us to discuss the market move. Mayuresh, good afternoon. So the big question is, have you seen any kind of panic from retail? You must be getting a lot of inquiries about what's happened to the market today. Why I'm asking this is because the retail money has been important for this market, especially in terms of the mutual fund flows. So what's been the feedback from your retail investors?
Afternoon, Anuj. I think at least at this point of time, the feedback probably is that they're not too perturbed by what is going on. But again, I think if this prolongs over a longer period of time, and again, I think this has repercussions over the next few months. Clearly, I think the devaluation that you've probably seen will make Chinese exports more competitive, which puts India in a very tight spot as far as our export competitiveness is concerned. That probably lays a question mark on how our export-oriented sectors will do, specifically in terms of the visible good sector, not the invisibles like IT. Clearly, I think you're going to also have a look at what is probably happening in terms of the budget panning out and how earnings are happening and the kind of capex data that we've probably seen. I think the government capex is firming up, but the private capex is not following at the pace that one really expects. So we are expecting weak corporate earnings to pan out over the next couple of quarters. Capex not expected to pick up. And again, I think the export competitiveness, if that probably goes down with the Chinese devaluation that you probably witnessed, you're probably going to see a prolonged slowdown probably happening across the emerging world, currencies included. Having said that, probably we were still contemplating a range on the markets. We're still doing that of 7,500 to 8,200. That's a broad range that we're probably talking about. But clearly, I think at this juncture, I think retail investors are very, very skeptical. They are taking calculative steps. And again, I think they're having a very, very stock-specific approach at this point.
Okay, well, since it is a stock-specific approach, let me pull up the intraday chart of one stock, L&T. In the last 10 minutes, L&T's chart has plummeted to the lowest point of trade, and as we know, this stock has hit a fresh 52-week low in trade today, so it's now trading at the 1250 mark. Mayuresh, hi, afternoon. This is one stock that has been under intense pressure. In fact, a heavyweight like L&T has lost more than 30% in the last 6 months. At what point does L&T become attractive for a long-term buyer?
Afternoon, Sonia. Clearly, I think if you look at the positive first of L&T, I think an order book of 2,44,000 crores, the hydrocarbons in the past quarter has not done that badly. Again, I think the two segments that probably did a little bit worse in terms of performance were the heavy engineering and the metallurgical and the material handling department, which probably had lower EBIT margins. So clearly, I think if you look at the overall size, the reduction in the order intake, the reduction in revenues probably saw the stock correct. It can correct further, and again, I think the appropriate time point can be another 4-5% correction from the current level. Is it possible? I think it is possible because, as I was mentioning earlier as well, the kind of activity that we're probably seeing in terms of slowdown happening specifically in the oil and gas, energy, hydrocarbon space, I think that will be very profound over the next few months if the trajectory continues in the same manner. You're still going to see probable pain happening in the two segments that I discussed. And clearly, I think the non-core asset sales, including the listing of L&T Infotech, will be one point to watch out for. So clearly, I think another 4-5% correction on the stock, in my opinion, becomes a good opportunity. I think it's a direct play in terms of how the capex cycle will revive. It is not going to happen soon, but again, I think if you've got a 2-year time horizon, I think any 5% direction onto the stock or correction onto the stock, I think becomes a very good opportunity for long-term investors to enter.
Okay, State Bank of India, it's added 51 lakh shares in open interest, so it's really big selling taking place now in the F&O market for some of these names. Axis Bank, Bank of Baroda, ICICI Bank, all these names are seeing aggressive selling, so some of these stocks should also come up for you. Sudarshan, you said Can Bank as a shorting idea, but what about the larger ones, the PNBs, the SBIs, the Bank of Barodas?
Well, Bank of Baroda was a short idea at 11 a.m. If you remember, and I mean, I'm just recollecting. And in the morning, we had Axis, which was a private sector bank. I've been saying that except for State Bank, all PSU banks are short candidates. So it's really a question of selecting which one could fall in the next few hours or next couple of days more. That's all. PSU banks are a complete avoid for bottom fishing. Please don't dabble in them.
Okay, and any thoughts on how one can approach L&T?
No, as an investor, it's always mouth-watering to say and want to buy L&T at these prices, but 52-week lows are not buying opportunities, Sonia. So I think you have to wait patiently for this carnage to be over. L&T hasn't actually suddenly come into these lows. Now it has been drifting down repeatedly, so it's not as if it's building a base and just by chance it came to this low. It's not that.
Okay, so Darshan, what about some of these ADAG names? It looked like after a long time there was a big rally taking place. Would you say that uptrend is still intact despite today's correction in names like Relcom, Rel Infra, or can you say that maybe the rally is over now?
I would say the rally is intact, but that doesn't mean I'm giving a buy idea today. But I think the question was, is the uptrend, is the intermediate uptrend intact in ADAG group stocks, or was that a flash in the pan? And the answer is that the uptrend is genuine and intact, and we can see deep corrections, but big declines in these stocks should be buying opportunities.
Okay, we'll do one thing. We'll just take a short break for now with the note that the market is still at the lowest point of trade. The Sensex has not shown any sign of recovery. In fact, it's still down more than 530 points. So this is a disastrous start to the year, especially for the bulls. We'll take a short break, but coming up, the market slides on the back of the weakness in China. Tirthankar Patnaik of Mizuho Bank will join in on the other side to assess the outlook for Dalal Street.
Even within the Nifty, very, very selective stock picking will help you outperform the Nifty by a mile. The opportunity to look outside the index, do ground up research and not just go with the tide is probably going to give you significant alpha this year. The smart fund managers are going to make incredible returns for their investors. There was probably nobody who wasn't expecting that 2015 should be a blowout year, and that didn't happen. Okay. So sometimes the consensus, in fact mostly the consensus tends to get it wrong. The Nifty may not be the place to look for returns, and that individual stock picking will work. Even within the Nifty, if you look at the Nifty over the last year or so, the 4% negative returns, but you've got a Maruti which has given you fabulous returns, you've got a Lupin, you've got a BPCL and so on.
CNBC TV 18, celebrating 16 years of business leadership.
Welcome back. Well, for the bulls, today will be a day that one would like to forget because of the kind of cracks that we've seen in the markets just at the start of the year. 500 points straight off the back gone from the Sensex. Tirthankar Patnaik of Mizuho Bank joins in on the phone line from Mumbai. Tirthankar, hi. Good afternoon. It's been quite a rough start to the year. How have you read into the news from China, and how should an equity market investor sitting in India react to it?
Happy New Year, guys. We've started the year on a fairly low footing, which should ensure that final numbers come out quite well, I guess. So, well, point is, slowdown in China is something known. What is not known is what's the pace of this slowdown going to be. And while the Kaiksen number, the PMI number that was expected to be below 50 this time, 49 or so, came out slightly lower than expectations. I guess markets are still not agreeable with the fact that Chinese economy may be majorly slowing down in 2016 as well. And as you noticed, our own manufacturing PMI did slip down to the lowest figure in 26 odd months since October 2013, and that also kind of weighed on our markets as well this time. So for the Indian markets, the Indian economy remains quite strong. It will remain the world's fastest growing major economy in 2016. There is no doubt about that. However, since global headwinds are quite strong at the moment, we will likely see the markets remain quite weak in the first quarter and second quarter of this year.
Okay, Tirthankar, hi, good afternoon.
Hi.
So how should one approach this market? Still look at this market as being a bottom-up stock picking market and look at all these corrections to buy, or would it be prudent now to just wait on the sidelines, see where things go in, as you said, 1 or 2 quarters, and then take a fresh call?
See, my sense is that the portfolio positioning would not have changed much since the third quarter of the year. In terms of earnings, our earnings are not going to recover anytime soon. Our GDP growth, is likely to remain in around the 7.3 to 7.5 kind of range in 2016 as well. But given that the overall macro global scenario remains quite weak, India's portfolio positioning would remain a local over global kind of sector positioning, and that portfolio positioning would not change. And my sense is that at this point, it would not make sense to really look for bottom right now. Wait for the markets to recover, wait for the volatility to stabilize. Today, VIX has gone up some 16-17%. This is not a point that you actually buy into the markets. We are likely to see our own earnings season start in 2 weeks' time, and not too many positive surprises are there at the point as well. So wait for the earnings season to give some more clarity on how the overall earnings growth trajectory is going to be over the next 2-3 quarters, and then take a portfolio positioning change.
Yes, actually that's the other worry, now when we head into earnings, it will be like jumping from the frying pan straight into the fire, because we do have weakness expected from the likes of IT, etc. Do you get a sense that we could revisit the 2015 lows of 7,500 in the first quartile of 2016 itself?
I would not rule that out, sir. Yeah. To be honest, our markets have been fairly resilient, given that there is the domestic investor interest remains fairly strong. But from what we've seen happening in the third quarter and the fourth quarter with foreign investors, and now with the cost of funds globally slated to go up, one would probably wait out at this point and not actually rule out a 7,500 kind of scenario as well in the first quarter.
7,500 is still okay, Tirthankar. At least we've seen that in the past. We've seen that in 2015. The worry is, are we in a bit of a bear phase which takes the Nifty much lower than that? Maybe we complete a 30% correction and the Nifty goes sub 7,000. How high would be the probability of an event like this taking place in 2016?
To be honest, my sense is that one would ascribe a fairly low probability to that. The Fed's rate hike in 2015 fag end did came in after a fairly long period of deliberation by the Fed as to their sense of how the global economy is going, as to their sense of how the US economy itself is going to recover. My sense is that if the Fed does err on the side of optimism, we might see slightly much fewer hikes than the Fed is pointing out, and from that standpoint, I would not see a 20-25% fall in our markets. China's slump notwithstanding, we've seen the trading halt for today's markets have gone down fairly sharply, because we had a trading halt in China for a couple of minutes, and then the market actually did go down fairly sharply, and European markets have also taken front. That should not be our goalpost to that should not be our view to look at a 20-30% drop in the markets this year.
Okay. In 2015, although the headline index fell, the mid-cap index did quite well. So if you had found individual stocks, you would have made a lot of money in quality names. Do you think 2016, even that opportunity might not hold, and maybe we could even see further pressure in the mid-cap and the smaller names?
I've always maintained that if the broader economy is going below par, then stock picks are good, but for a period of time, the broader mid-cap index is definitely going to start trailing the large-cap index, trailing the narrow market. This is not a market where one can actually keep making money in the broader mid-cap index. Of course, there might be picks which will do continuously well. We've had a couple of good IPOs also in the fag end of the year. That shows that the recovery in India is well and true. But remember, if the narrow market does not do well, then one would not expect the mid caps to keep outperforming.
Okay, Tirthankar, thanks a lot for your time today, and we wish you a good 2016. So that's the call from Mizuho Bank. Let's talk about some more stocks then, where we've seen a bit of a move in last few minutes of trade. Let's pull out the intraday chart of PNB. That was one of the big losers of last year, and that's continuing. In fact, this stock has now fallen 50% from its highs, so that stock's not looking good. Apart from that, you have Bajaj Auto, which is also trading at the low point of the day or nearly there. Maruti Suzuki, at least Maruti was one stock which was holding out in the first half of the carnage, and if you see the intraday chart of Maruti, even that's now trading at low point of the day. So 45.80 is what we have on Maruti. But the turmoil in China has a lot of people worried, and is bound to have an impact on India as well. That's the consensus among most experts. Take a look.
The China event, to my mind, is underappreciated by the markets. And I don't know whether it plays out in the first half or whether it plays out in the second half. But in 2016, if we have to watch for one biggest event, it is the China event. And I would be watching it very, very carefully. Even a mild hard landing were to happen in China, I would think it will be a major event to watch in 2016.
We think China does continue to slow down, and more than the consensus is expecting. But the important issue here is that this is China rebalancing. This is not China having a hard landing. So even as the investment side of China's economy slows abruptly, there's a significant pickup in the service sector and private consumption that suggests that the overall picture isn't nearly as bad as the headline numbers are going to have investors thinking.
I think that further deceleration is due, but further deceleration is going to be probably backstopped and mitigated by additional easing measures. So no hard landing story coming up in China in 2016, but probably more downside to expect from growth side, and a little bit more cautious approach still about the equity markets as well.
Okay, so that's the view coming in on China, but let's get back to the markets and get a couple of updates from our guests as well. Still down more than 500 points, but there are some long-term ideas that our guests have identified for us. Mayuresh, a stock that you've been tracking very closely is Power Grid, and that's something that you're recommending long-term investors to buy as well. What kind of triggers do you see in 2016 for the company?
So clearly, Sonia, I think the biggest advantage for Power Grid is the kind of execution that the company does and the positioning that it has, where they've got very strong entry barriers. So I think the competition is very, very limited. That's point number one. If you look at the results that have gone by, again, I think we're expecting capitalization to be around 22,000 crores for FY16. And the entire play for Power Grid is more on the regulated model and the regulated ROEs that it generates of 15.5%, add to that 0.5% on timely completion of projects. Now again, if you look at the kind of revenues that the company had delivered, the transmission revenue is a little bit lower in the quarter gone by, but clearly I think the kind of addition that we're probably expecting in the power generation to probably increase by 380 gigawatts in the 12th 5-year plan, and again by around 110 gigawatts in the 13th. We're probably looking at investments in the transmission sector to the tune of 1,80,000 and 2,00,000 crores probably in the next 5-year plan. So clearly I think Power Grid is a direct play in terms of how the capitalization plays out and how the capex outlay plays out. So we're clearly looking at 1,10,000 odd crores in terms of capital outlay over the next few years, and you're probably looking at capex plus CWIP in excess of 1,00,000 crore. So clearly I think the regulated model is going to work extremely lucratively for Power Grid over the next few years. And again, I think in terms of earnings growth, we're expecting a 16% top line and EBITDA growth. We're expecting a 17% bottom line growth. It might be a very dull and boring stock because it rarely moves. It moves probably in very, very few patches, but clearly at a price to book of 1.5 times, we feel that this is one stock on decline that long-term investors can look at for a target of 170 over the next 12 months.
Okay, the market may be down, but two sectors clearly stand out where we have seen buying continuing. One is the solar play, Mozaber, Indosolar. Some of these stocks are having good times. So if you see Mozaber's intraday chart, that also had a decline, but it's now almost back at the high point, and so is the case with Indosolar as well. So both Mozaber and Indosolar doing good, and the other sector, probably Sonia, the sector of last year, the country liquor, the domestic liquor companies, GM Breweries. Pull out the intraday chart of GM Breweries. It was up how much? 700% last year, and it's straight. So business going well for some of these companies.
Oh yes, that's got some, it's seen a skyrocketing move, right? Every day it moves up higher. Well, 3 cheers for Desi Daru, right?
Yeah, they must have got so many clients from the last 3 rows after today's trade. So that's GM Breweries up about 10%. But the Nifty is not giving up 7,800. At least that's the message that the market has given over the last 1.5 hours. Pull out the intraday chart of the Nifty, and that's still somewhere around that 7,800 mark. Sudarshan, you did say that you'll buy puts. What strikes would you advise retail investors or retail traders rather?
I buy 7,800 puts, which is where the markets are giving that leg of at least finding support for today. That's at this point available for 118 rupees. That's your risk. It is possible that markets may be seesaw for some time, but today's big decline at least gives the impression that eventually the trend, the decline, the downtrend has asserted itself. So buying puts at least protects you from volatility.
Okay. Mayuresh, I wanted to ask you about Tata Motors because, you know, this the slowdown in the Chinese market is well known, and over the last couple of months we've seen Tata Motors' contribution from China has actually gone down quite a bit. So why did we see so much pressure in trade today, you think?
So clearly, I think you're right. It's around 14-15% at the current juncture. And again, I think this has largely got offset at the decline in volumes from China by the increase in volumes that we've probably seen in the North American markets and a little bit of respite that we've probably seen in the European markets. Now, clearly, even on the domestic front, though MHCV sales are showing an uptrend, I think the Tata Motors story is more on the JLR front even now. Having said that, I think the company with introducing new platforms, you're probably looking at new variants come through on different models over the next few months, and that is probably going to hold the stock in good stead. So clearly I think it's more sentimental drop off at this point of time, because the kind of Chinese volume contribution a year back was quite significant for JLR volumes of Tata Motors. That has come down significantly. So our take is that the numbers should be quite reasonable. The markets have factored into a large extent the slowdown in Chinese volumes. To a certain extent, I think you're also looking at the EBITDA margins of JLR staying between that 12 to 14% kind of a range. So clearly I think all the negatives probably in the price, but with the kind of data that we've probably seen, we're probably looking at the extended amount of slowdown probably happening on the premium segment that JLR caters to, specifically for the Chinese market. But in my opinion, I think any further decline out of the stock becomes a good opportunity, but you have to wait for the stock to settle and stabilize. Probably I think you'll wait for declines before we probably suggest long-term investors who start accumulating the count.
Okay. So Darshan, what about something like a Shrey Infra, which had really good last 2 weeks, but today we've seen a big decline, down about 9%.
Well, it's a volatile stock, and there's a disclosure. I actually happen to own some shares in it, but generally NBFCs in general should outperform the market. The key word here is outperform. If the market is going to slide down, none of them will be sort of unscathed. But Shrey Infra, to my mind, for the long-term investor is a good opportunity.
Okay, Shrey Infra is a good opportunity for the long-term investor. Let's do one thing. Let's take a short break and come back and chat about the last half an hour for the market. Our closing bell money control question of the day is to do with a comment that Madhu Kela of Reliance Capital made. He said that China is the big threat of 2016. Do you agree? Log on to moneycontrol.com, post your responses there. We'll read out some of the most interesting ones post 3:30 p.m.
CNBC TV 18, celebrating 16 years of business leadership.
Welcome back. The story of the day has been that because of the global scare, we have seen a big decline in our market, and as of now, the Nifty is trying to hold 7,800. For the last 1 hour or so, we haven't seen incremental losses, which is something that the bulls might take heart from. A couple of stocks that I want to point out. One is HUL. HUL is now approaching day's low. It's still the biggest index winner, but we have had that kind of day. Only 3 index winners. HUL is still the biggest winner, but if you see the chart, it's declined a bit. ITC, on the other hand, is trying to make a bit of a comeback from the low point. So pull out ITC, and that's recovered a bit. But Prakash Gaba tells you what to buy or sell today for a reverse trade tomorrow. Prakash, hi, good afternoon. Your stock ideas?
Well, I would say that idea to sell it, because structurally it looks weak to me. In the morning when you introduced, you said there were 4 in the green and 46 in the red. Now there's hardly a dip. So I would say that certainly I think Godrej Industries is looking weak to me and can slide down to levels closer to around 367. I would have a stop about 380 on Godrej Industries and trade short side. I also do feel that Hero Honda is looking weak to me. Structurally is actually broken down. The way it's traded, kind of a gap down move. There's a very good chance Hero can slide down to levels closer to around 2,600 zones, stop about 2670.
All right, Prakash, thanks for those ideas. That's what you can buy today and sell tomorrow. But let's observe some more stocks on the screen now. Varinder Bansal joins us to give us some buzzing stocks. Varinder.
Well, the market has been at a weak shape and we have been talking about all the losers. Let me just run through all the gainers in the small cap arena. Anuj mentioned about all the beverages companies. Look at Orient Beverage, Associated Alcohol and Breweries, GM Breweries, of course, Ravi Kumar Distilleries. All these stocks are gaining anywhere between 10 to 20%. Among other small cap gainers on good volumes today, Acnit Knitting up 20%, Rishi Laser Cutting up 20%, Texmo Pipes, Vijay Textiles, Jash Industries, Odyssey Technologies, UV Board, Royal Orchid, that stock was up 15%, SR Shipping up 20%, SR Securities up 10%. These are the only listed companies now from the SR group. Jacob, Eastern Trades, Tenwala Polymers, Kiltich Drugs, Lux Health Services, Ujas Energy, Moser Beer, Indo Solar, so all that solar pack is moving up today. Bhagwati Auto Cars, RA Drugs, Andhra Petro, Parenteral Drugs, Jyoti Resins, Ludlow Jude, Moltech, Carnation Industries, Dick Gems, Sankhya Info, Cabra Drugs, Orient Paper Industries, good volumes today, up 10%. Vedavak has been hitting circuits, upper circuits, Trilogic Digital. Some new names which I've caught up today, look at ScanPoint Geomatics, that stock is up 20% on huge volumes today. CGVAK Software, Semper Nutrition, Sunil Agro Foods, Anjani Synthetics, Alu Fluoride, Chandra Prabhu Limited, all these stocks are also moving up today.
Okay, Parinder, thanks for that. Chandra Prabhu International. Okay, I'm going to find out what that company does. Thanks for giving us those details. Let's get back to our guests now. We have about 10-20 more minutes to go before we end for the day. It's now down 522 points, so we haven't really seen any kind of recovery at all. Anuj, 7800 doesn't seem to be holding, so it's trading well below 7800 at this point in time. If we do manage to hold on to 7800 by any chance, do you think the bulls should still have hopes, or should they just give up on their hopes now?
No, I think they should have hopes if 7800 mark is holding, Sonia. And if you see the pattern of the day, the last hour hasn't really been too bad. The market made a bit of a low at around say 130, and since then the market has not fallen further. Why 7800 is also important is, Sonia, because what you saw from 7800 to 7950 was essentially a fake rally. I mean, a rally with low volumes, which always had the risk of seeing one of these days and being evaporated. Why 7800 also becomes important is that it will tell you that whether the trend that we had of lower highs and lower lows will remain intact, and whether 8000 was indeed the last big high for the market. So that's why 7800 for me is important. If in tomorrow's trade the Nifty goes towards say 7750 or thereabouts, then I think, as Sudarshan is also saying, this is a market which might resume its sharp slide back towards the previous lows of 7540, and then the big question would be, would 7540 hold as the low for the market? That's become sacrosanct now.
Okay, well, yes, as even Tirthankar was saying, he wouldn't rule out the possibility of 7500 getting taken out in the first quartile of this year itself. But Deepak Shenoy also joins in to give us a couple of ideas that he has identified for us. Deepak, up until the last 1 week, there were so many mid-cap ideas being discussed, but now suddenly this place or this mid-cap space looks fraught with risk. Would you advise investors to buy now, or do you think that one can get better opportunities in the months to come?
Afternoon, Sonia. I think it's from a mid-cap perspective. In fact, from the small-cap perspective, we're still seeing a lot of stocks kind of outperform even today. So we believe this is still a retail-led move for small caps. Mid-caps are always going to be fraught with risk, whether you buy them in a bull market or whether they're there's a small sign of bearishness. So I would always advise serious caution. We do recommend many mid-caps, and we consider a number of items such as a margin of safety in terms of them not being very highly valued in terms of PE, or that have a growth story that will sustain. But having said that, you can see these stocks fall 30-40%, and you should be willing to take that kind of a risk and not consider them a safe portfolio.
Okay, let's pull out a couple of more stocks. Barinder has just alerted GSFC and Torrent Power. In last 15 minutes of trade, two of these stocks have seen a bit of a rally and backed by decent volumes as well. But Deepak, hi, good afternoon. So, is China still a big risk for this market? Is this as big a risk as, say, something like Lehman was back in 2008, something which could really unsettle the global equity markets?
Anuj, actually, I think it's a very different play from Lehman in the sense right now, if you look at what's happening in China, it is not really foreign investor led. So they are unlike India, where FIIs exiting causes a serious market crash. It's actually they are mostly local investors because foreigners are not allowed to invest in there. The risk with China remains large because they're such a huge economy. But we believe at least that may not be the factor that hurts India. India is the factor that's going to hurt India. We've had 3 quarters of sliding profit growth in the Nifty companies. We've had a lackluster December apparently from some of the PMI data as well. We've had NPA issues in the banking system that have been highlighted in recent RBI reports as well. So given that, I think a bigger risk really is our slowdown to our markets rather than China at this point.
Okay, fair enough. Sudarshan, we were talking about how some of these telecom names have been under quite a bit of pressure. Even if you look at the top losers now, along with telecom, PSU banks, you have some of the auto names also that are cropping up, not just Tata Motors, but even, names like M&M, you have Hero Motocorp, Bajaj Auto, Maruti, all are down about 1 to 3% today. Any fresh shorting ideas that you've identified in the auto space?
Well, the auto space is an area where shorting should be avoided as much as possible. Metals are cracking, that is much easier. And in auto, the reason I say this is it is not easy to sell Maruti. It's probably not a good idea. The only easy short in the auto space is Tata Motors, where there is clear signs of distribution. That distribution is now breaking down and giving way to a renewed downtrend. Beyond Tata Motors, I would be a little careful.
Okay, beyond Tata Motors, will be a bit careful. Deepak, let's talk about some of the bigger stocks. We have seen big decline in names like HDFC, ICICI Bank, Tata Motors as well, down about 6%. Any of these stocks where you would want to top up in your portfolio?
I think HDFC banks or ICICI Bank, again, they're as part of the financial, financial package here. I would not get into them right now because I believe the financial sector has 2 major problems. One is the NPA issues that seem to plague the sector as a whole. The HDFC Bank is a little more protected and so is HDFC. But the larger issue is that foreign investors are exiting and their largest holding happens to be in these companies. So when they exit, obviously there will be a downward pressure on prices. So I don't believe that they're yet at a price point that would be attractive.
Okay, by the way, the market is now back at the low point, 7785, and ONGC and CAN have also fallen now. Now keep in mind, we saw intraday reversal in crude as well. Overnight we had seen a big rally in crude. That continued, but now we have seen crude prices also reverse, so the direct correlation is on stocks like ONGC and CAN. Both of them are down, and what that means is that there are only 3 index winners now: Lever, Asian Paints and Wipro. Rest everything is in the red. And look at Tata Motors intraday chart yet again. It's seeing incrementally lower levels, so 6.5% lower now on Tata Motors. Pull out the DVR as well and see what's happening to that. That also is down about close to 7%. IFCI is down 5.5%. Century Textiles down about 5%. A lot of these stocks now seeing quite a bit of decline. IDBI Bank as well, 6.5% lower. Sudarshan, in the broader market, what about some of these quality names? We spoke about some of them earlier, like Oro Pharma, Havells, and a couple of others. How would you approach these stocks?
No, they're 2 different stories. Oro Pharma is a buying opportunity. Whenever this decline stops, wherever it stops, I think I would be a buyer in Havells is not. Havells is a topping out process. A topping out process is going on in Havells. It's a short sell. It's not an intraday short, but if you are willing to carry the position for a few weeks and prepared to take some heat or volatility, Havells is a very easy short.
Okay, well Deepak, you've identified a couple of stocks for us for the long-term investor to look at. Arvind is one of the stocks on your list. This stock had resumed its uptrend in the last 1 month of 2015. Do you expect more upsides in 2016?
Yeah, in fact, Sonia, one of the reasons why we picked it is also because it broke out of nearly a 1.5 year range. It was topping out at 350 every time, It had crossed that considerably in last couple of trading sessions, but today of course it's a little bit down. But the longer term focus here is two things. One is, you've got a fairly big challenge for the rupee going forward. So we believe that textile companies, and of them Arvind, and we have a couple of mid caps as well in the space that will do very well. Arvind will as well. It's a fairly well integrated player. The second thing is, now on December 30th to 31st, I think the government introduced the amended TUF scheme for textiles, and this favors the large cap companies with 30 crores of investment in machinery and above. So that actually will provide a fillip to companies like Arvind, and I think Arvind stands to benefit at least in the medium term from here.
Okay, by the way, there's an interesting bit in the market right now. The Nifty is at the low point of the day, so let's show you Nifty. Down about 180 points, 7783 or 7784. About 30 minutes back, we had seen a bigger decline in Nifty futures and in Bank Nifty futures. But now, if you pull out the Nifty futures, the decline is lower. In fact, the 5-point premium has gone up to 20-point premium for Nifty futures. Almost similar is the story with the Bank Nifty, where we had seen the premium go down to as low as just about 10 points. And now if you pull out the Bank Nifty future, the premium has again gone up to 41 points. So the Nifty and the Bank Nifty at low point of the day, but the futures clearly are not at the low point of the day. Now it could be indicating two things. It could be indicating aggressive cash market selling in some of the large heavyweights, or it could be meaning from the trading side there's been a bit of a buying in index futures. So that's something that we'll find out, of course, only when we have data, but for now that's the interesting bit that stands out. But let's discuss some more stocks then. Mayuresh, we have seen a bit of a rally in stocks like IRB and Punj Lloyd today, of course backed by news. How would you approach these two stocks?
So clearly, I think there have been order wins, and IRB has got one of the biggest orders that one really can expect. So 16,500 crores of an order book. You're probably looking at IRRs from the project to be around 16%. And generally, I think the equity IRR should be between that 16-18% range. So clearly, I think the company is or has been focusing on execution, which has been pretty strong. You're probably expected to see debt levels go up, but again, I think the asset book itself will burgeon up over the next few years. So it all depends on how execution will probably pan out. And again, specifically on the construction side of the business, where the EBITDA margins lie anywhere between 28 to 30%, I think that you will see some amount of fillip going forward with the new order. The tolling business has held up pretty well for IRB Infra. So in my opinion, again, I think long-term investors who are holding on to stock should continue holding on to a stock like IRB Infra. But we again like EPC players as well. So I think the corresponding and complementing theme along with road developers would be the EPC players who should benefit over the next few quarters with orders coming through.
Okay, well, fair enough. Well, IRB Infra, talking about that, that company did speak with us earlier in the day. Punj Lloyd was the other one that also spoke with us post the order win. So let's listen in to what the management's had to say.
We expect the agreement to be signed in next 1 or 2 months, and post that we'll have 180 days period for achieving the financial closure. And post that around October 2016 we expect the project to start. We can only work for around 6 months a year in that particular terrain, and that's the reason if you look at around 7 years construction period, we get around 3.5 years to actually construct the tunnel, which is a fair good amount of timeline. And considering the past project management bandwidth of the company, we are quite confident that we'll be able to complete it in the given timelines.
These 4 orders, our target book goes to about 22,000 crores. One is in Bihar, which is Simaria and Khagaria. Incidentally, is an extension of the road project we had completed about 2 years back. There's about 570 crores, and timeline is about 30 months. Then we have one project in Chhattisgarh, which is Raipur to Simga. Right. It's about 60 kilometers. And here also timeline is about 30 months. The market is very competitive, but still the margins will be somewhere in the range of 5 to 8%.
Okay, that's 2 stocks bucking the trend based on news. But for the market, I don't know how to look at the last hour of trade really, because the market didn't have incremental weakness, but at the same time didn't have sharp recovery either from 7,800. Let's pull out the European markets as well, and also show you the Dow futures to see if there's been any kind of changes that we have seen in some of these markets, because that's also going to be a crucial factor. A lot of times we tend to sort of factor in the US market fall the previous day, but as of now DAX is down 3.5%, CAC is down 2.5%, FTSE is down about 2%, and for Dow futures, let's pull that also out to see, still down about close to 300 points, or indicating a start at least 300-point lower, so not looking good on that one. For our markets, let's discuss some more stock ideas then. Sudarshan, Adani Group stocks, Friday was quite good. Today we have seen some reversal in names like Adani Port and even a couple of other names.
Well, Adani Ports is in a downtrend, so Friday was an exception. Today is the trend on the downside. Adani Power is a different matter. The big decline in Adani Power is probably coming to an end, as it is in most power companies. Now, days like this will certainly create adverse impact. But Adani Power is a buying opportunity even for short-term traders. Whenever the market stabilizes, it should be an outperformer.
Okay, fair enough. Deepak, you were telling us about the Arvind that you have picked up for the long-term buyer. But what about the other stock, Tamil Nadu Newsprint? You like that name as well?
Yeah, it's a mid-cap, Sonia. It's basically government owned, government of Tamil Nadu owned paper manufacturing company. So one of the things that's going to happen in 2016 is the Tamil Nadu elections, and we believe that will provide some kind of impetus to demand, at least for their products. It's at a low PE, it's at 8 PE, it's grown earnings more than 45-50% in the recent past. So there is a margin of safety over there, and stocks actually close to all-time highs, and it's not fallen much today as well. However, I mean, remember it's a mid-cap, so it's something that, as a disclosure, you have to understand we're both biased and we own it. So in that context, still we think that this is a decent medium-term play.
Well, how times change. On Friday we were only discussing aviation stocks, and till now we haven't discussed them even once. Deepak, how would you approach a name like Jet Airways, which is now of course available for trading in F&O, or Indigo, or even SpiceJet, which actually price-wise has been the biggest gainer among these aviation names?
Absolutely, Anuj. In fact, I've made the cardinal mistake of ignoring their rise. We are now long Indigo in our portfolio, but and we like the fact that Indigo is one of the largest players. It continues to retain market share. Jet, on the other hand, has been losing market share, at least to Spice and Air India. So I think from a perspective of investment, Spice and SpiceJet and Indigo would be the best players to go with. Crude prices notwithstanding, I think the aviation sector, unless they have a big price war, is in for good times, at least for the next 6 to 12 months.
Okay, Mayuresh, since a lot of people will now start to look inwards or to domestic stocks, you might see a lot of traction in some of these auto names that have a domestic-led exposure. So, for example, names like Ashok Leyland that did quite well in the month gone by. That stock is up almost 4% today. Would you buy it for the longer term, or any other auto stock that has a more domestic exposure?
No, clearly I think Ashok Leyland remains one of our top favorites, Sonia. And again, I think the entire theme is based on how the MHCV sales have panned out for the company. Clearly, if you look at the track record and what you're probably seeing in terms of market share, they've got a decent market share of 30-odd%. And both on the MHCV passenger as well as the truck part, they've done exceptionally well. Having said that, probably I think the LCV has been a weak link for Ashok Leyland, but over the next few quarters and the kind of respite that we probably see in the December numbers, if those numbers start panning out over the next few months in a positive fashion, the consolidated numbers will start looking much better. Clearly, I think the export percentage, the management is indicating of actually doubling that from 15 to almost 32-odd%, which can be a huge plus for the company. So clearly, Ashok Leyland is something that we continue to like. And again, I think within the two-wheeler space, I think TVS Motors, I think the numbers were quite reasonable in my opinion. And again, I think the management commentary per se in the quarter gone by, they're expecting the market share to probably go up over the next few years to 15%. A couple of their launches have been very well received. So if you take into account Jupiter has been extremely well received by the markets. And again, I think Apache, I think the refined version of that, Star City, I think the volumes should see some amount of growth going forward. So clearly, I think TVS Motors' margins that probably came through with a good product mix, lower contribution of mopeds, the product mix was quite good, the commodity prices aided the margin expansion. We are probably looking at double-digit margin growth happening over the next few years. So anything on TVS Motors in terms of declines, I think long-term investors can have a look at that stock as well.
Okay, TVS Motor can be looked at on declines. Just about 2.5 minutes left for market to close. So let's just do a quick recap and then we'll get back to our guests for some final thoughts. Well, it was a bad day. I mean, the Nifty practically is ending at low point of the day, and it's ending below 7800. The averaging should also mean that the Nifty should end below 7800. Will be interesting to see when was the last time we closed below 7800. You'll have that on screen in a bit. But for let's talk about the stocks that led the market decline. The biggest contributor was HDFC. That stock was down 3.5%. The biggest loser was Tata Motors, and that too is heavyweight, so that was down about 6.5%. And then you had some other heavies like ICICI Bank, Larsen and Toubro, State Bank, which were also lower. Idea was down about 5%. Bharti as well was lower in trade. Metal stocks led by Hindalco were lower in trade. Adani Port fell about 3.7%. In fact, the interesting bit about today's trade is that if you look at the top 7 or 8 losers, they're all from different sectors, barring PNB and Bank of Baroda. Then you had Lupin, Gale, couple of other names falling in trade like Grasim, Z Entertainment as well corrected. So many stocks down more than 2%. ACC, Sun Pharma, Reliance, TCS, Bosch, ONGC, so many stocks. Dr. Reddy's down 1.5%, Cipla down about 1.5%, Coal India down 1%, even a strong stock like Maruti down about 1%. There were only 4 index winners by the end of the day. Tata Steel was up 0.5%, and Wipro, Asian Paints and HCL Tech were up by some change. So clearly a bad day for the large caps, and not equally bad day, but a bad day for the mid caps as well.
Oh yes, it was a weak session, so the mid caps were down 0.8%, but the major part of the bludgeoning was left for the large caps. So in that sense, the mid caps were a tad bit spared, but no, the market breadth was quite weak today. So 1:2 in favor of the declines today. Let's take you through some of the key losers. Shrey Infra was down almost 9%, so deep gash there. Reliance Communication, IFCI, Reliance Power, Adani Power, IDBI Bank, all these stocks were down anywhere between 7 to 10%. Jet Airways came in for some selling pressure in late trade, so that stock too fell by almost about 4% or so. On the gaining side, there was an interesting bunch of stocks. Ashok Leyland, the commercial vehicle sales were quite strong this month, in the month of December, so that stock was up. Jaicorp had a big move because the centre gave its nod for the Mumbai Trans Harbour Link project, so Jaicorp up about 14.5%. IRB Infra won that 10,000 crore order, so that stock was in the green. Punj Lloyd won 4 highway EPC projects worth 1,500 crores. That stock too up about 6%. Torrent Power hit a fresh 52-week high. So there's an uninterrupted bull market going on in that stock. And GM Breweries as well. The lesser said about the gains over there, the better. That one has been a big mover, up almost about 11-12%. But with that, we come to an end of what has been a really disappointing session for the bulls. That is, the Sensex closing with a loss of 540 points and the Nifty down almost 200 points. Anuj, the worrying part about today is not once did we see any kind of durable recovery, and the markets closed at the lowest point with cash market volumes which were really high, almost 17,000 crores today.
Yeah, I think cash market volumes is a big worry. The bigger worry would be the FI number, what happens over there. And not just FI number, Sonia, now we'll start to see the DI number as well, because, the big risk well documented in this market is that at what point will the retail say that, okay, this market is not giving me enough returns. So far, because the mid caps have done well and the portfolios have done well, we have seen continuous DI inflows. But if the index starts to go down, and if the index makes a new low, make no mistake, you will see slowdown in DI flows as well. So that, I think, would be a bigger worry. As I said, a market which closes at low point with high volumes is telling you that it's not looking good. Yeah. And you required 1 day to reverse 15 days of gains, or 1 fortnight of gains. That's telling you the kind of weakness that we had in market today.
Oh yes, Sudarshan, so what should the strategy be on the index itself tomorrow, considering today was such a poor day?
Well, whether the market opens up or down, I would be a seller in the Nifty. The only question is of trade location. Would I sell in the morning gap if there is any on the upside or downside? That early morning will tell me. But the view on trading is clear that I am not buying this dip.
Okay, not buying this dip. Deepak, from the risk point of view, do you think the equities are in a good place with the kind of decline that we have seen, at least at the index level? Or, is there a risk of this market seeing a very sharp correction at some point over the next 2 or 3 months?
Honestly, I believe that we had seriously underpriced risk, Anuj. If you look at the VIX, it was at 52-week lows on the December 31st trading day. It was at 12 or something. It was almost ridiculous to the point where we had actually started to recommend buying options, and it's almost it was at such a low state. You also have the first 2% day today since September 29th. September 29th is an up day and today is a down day. But 2% days used to be far more frequent, and markets are technically a lot more volatile than they recently have been. So I think we should expect a lot more volatility. We should expect 3, 4, 5% days to happen, given that in the next 2 months we have results, we have a budget, and we have potential GST session somewhere in the middle. We expect that this volatility will be here to stay. If there is more damage in Asian markets or markets in Europe and the US, I think that will also impact us. So we've got all these factors. I see no reason to expect that we will stay in the same place. However, it won't be unidirectional. I believe we will move volatile in both directions. So at this point, I would just say stick with stop losses, work your strategy the best way you can. It's not something that will decline. The volatility will not decline in the near future.
Okay, fair enough. Sudarshan, earlier in the day at 2:30, you were giving us a strategy, IT space, a sell call on TCS. Would that hold for tomorrow as well? And is it only TCS, or can other IT stocks be shorted as well?
No, in fact, it's not just TCS. Earlier, we have been talking about Tech Mahindra being the weakest of the lot, Tech M. So that strategy was already intact. TCS has now joined the list. In fact, because of Wipro, we can exclude Wipro because Wipro is choppy and actually not giving us much trading moves anyway. I would say that at least for the short term, all the 4 stocks, Infi, HCL Tech, TCS, and of course Tech M, are short selling ideas.
Okay, all of them are short selling ideas. But Sudarshan, at what point would you say that your theory would be nullified, which is that this is a market in which you would want to sell? Markets can do funny things. If tomorrow or over the next 2 or 3 days the market starts to rally again, at what point would you say that maybe the trend has changed again?
Yeah, that's a very fair question. As a trader, I ask myself this question all the time. So if I'm short in this market, if I have bought puts, which I have, then at 8,000, I would say that the puts are not going to work out and get out of it. That doesn't mean that markets cannot come down, but my trading positions will have to be liquidated. A confirmation of the uptrend will come when we cross that earlier high of 8,300. Once that is crossed, then we can say that the decline is over. 7,500 was the final low of the correction and markets are going to move up.
Okay, 8,300 looks like a distant dream at this point in time. We'll have to perhaps wait a lot more for that to happen. But thanks Sudarshan and Deepak and Mayuresh for joining us. You guys have a good evening. Hopefully we'll have better days for the bulls in the days to come. Let's slip into a short break, but up next we get to decode